You have to think in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years.
Michael, thank you so much for joining me again. Fantastic conference.
Isn't it?
Yeah. It seems like we're entering the era of corporate Bitcoin treasury. So let's just start there. I feel like more of the lesser known or zombie companies are the ones really taking action. And you said that it's the companies that are on a need to know basis that are really embracing Bitcoin. Some of the biggest names are going to come in last. Can you explain that?
Well, we've got haves and have-nots. CNBC talks about 100 tickers a day, but there's 100 stock tickers total, and they make up 80% of the trading volume. There's 12,000 public companies in the US. There's 4,000 or 5,000 on NASDAQ and New York Stock Exchange. Most of them, the market has lost interest in, and they're competing against a Google or against Amazon or against a Microsoft or against an Apple. So if you're one of those mid-sized small companies and you're staring at these trillion-dollar, digital giants, and no one cares about you, then at some point after struggling like that for month after month, year after year, you start thinking it's kind of hopeless. And so the explosion in interest in Bitcoin treasury strategies, I think, comes because companies are realizing that there's hope for them. There's an opportunity. And it is by plugging into the next great digital transformation, right? The way that you actually get back on top, the way you start re-energizing a company and growing it, is by digitally transforming your balance sheet. And the companies that have done it earliest are having extraordinary success. Companies like Strategy, companies like MetaPlanet. And so as more and more companies embrace the Bitcoin standard, and as their stocks start to perform, and as their investors start to see success, the idea is spreading because, no one takes a company public wanting to be an also-ran or be roadkill for Amazon.
Why do so many companies resort to things like stock buybacks or acquiring other companies when they're deploying capital? Why not buy Bitcoin?
The conventional corporate finance playbook is cash is trash, and cash underperforms the S&P index. And so the S&P index is the cost of capital, and if you've got excess cash flow, then you need to return it to the investors so they can invest it and get that cost of capital or get the S&P return. And you either do it with a buyback or you do it with a dividend. I think the primary reason the market concluded that is because for 100 years, the Treasury reserve asset of every public company was short-dated Treasury bills. And they never had another Treasury asset. Your choices would be Treasury bills, gold, or Bitcoin. Gold was the reserve asset of the 19th century. Corporate sovereign debt, like 30-day T-bills, is the Treasury asset, the reserve asset of the 20th century. And Bitcoin is the reserve asset emerging in the 21st century.
Next up, a quick word about my friends at Bitwise. They've been educating investors on Bitcoin for more than 7 years, have over $10 billion in client assets, and a team of 100 plus. Their weekly newsletter is a must read. It's written by their CIO, Matt Hogan, one of the best minds in the business. I highly recommend it. It's witty, bold, and quick. Takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. And always, of course, carefully consider the extreme risks associated with crypto. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. Bitdeer trades under the stock ticker BTDR and boasts a massive 2.5 gigawatts of electrical capacity across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Learn more at bitdeer.com. Don't forget to join me in BTC Vegas this May and attend the 4th annual Women of Bitcoin Brunch. Use code HODL for 10% off your pass. It seems like a lot has been happening with the sovereign debts and with the bond market that people weren't expecting. We have a lot of macro headwinds that even Bitcoin, I think, is facing. I'm sure the audience would benefit just from your macro perspective. We have these global war threats and tensions, the trade war. What do you think about that? And how should people look at Bitcoin and how should investors really analyze these concerns?
Well, all of these actions are creating uncertainty in the market, right? Trade uncertainty, operational uncertainty. How do I organize my supply chain? What products should I stock on my shelves? What products should I buy? How long will it take? What services do I need? Where do I source the services? That uncertainty creates massive inefficiency. It creates dislocation. Investors are discounting the future cash flows for the next 10 years of a given business. And so if it's uncertain whether the business will exist and in what form and how profitable it'll be, then they tend to shoot first, ask questions later, or in this case, sell first, ask questions later. Their view would be, let's just back away from the market until it becomes less uncertain. That's what is driving the macroeconomic headwind right now. Whenever a company runs into a difficult time like that, whether it's COVID, or whether it's the current, tariff wars, it behooves the company to be extremely well capitalized. What you would like is to have a company that has a deep, deep pool of liquid assets you can rely upon, even if your core business revenues get zeroed out. If you don't have that, you're going to go bankrupt and in prolonged crisis. Herein lies the solution, the promise of Bitcoin, and the problem with traditional corporate finance. Traditional corporate finance teaches these companies to decapitalize. So they've all been decapitalizing. They've been surrendering their capital via buybacks and dividends. So when they're not well capitalized, and they run into economic uncertainty in their operating business, that creates extreme anxiety for the employees, the executives, the customers, and the investors. The promise of Bitcoin and the Bitcoin standard is that every company can be well capitalized. Because if you simply start sweeping your cash flows into Bitcoin, or you convert your dividend into a Bitcoin buy, or if you convert your buyback of stock into a buyback of Bitcoin, then your enterprise value over time would double. And your organization would be valued partially on future expectations, but partially on the assets you own. And so you can imagine when 95% of the value is future expectations. When they become uncertain, 95% of the value becomes uncertain. But when half the value of a company is based upon the assets they own, right, then they have a built-in insurance policy or a shock absorber, and they have the luxury of being able to sit back and see how things work out, but without being desperate or taking short-term actions. And Bitcoin offers one more collateral advantage, which is the more uncertain the operating world gets, the more valuable Bitcoin becomes and the more compelling the idea is, because there are no tariffs on Bitcoin. Bitcoin doesn't have supply chains. It doesn't have all of the regulatory risk, the tax risk, the operating and the execution risk that you have when you have a business based upon providing products and services in a particular way.
You've said that if you want to 10x your money, buy Bitcoin. If you want to 100x your money, buy Bitcoin with someone else's money. And if you want to 1000x your money, then buy Bitcoin with someone else's money and lever it. But for the average person watching who's probably a wage earner and not a business leader, what do you think is the best way to 100x your money? Can you still do it with Bitcoin, and what types of strategies can be deployed?
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin And so it's going to be $100 million Ferrari, right? If you look out 20 years. So you have to keep your job, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long dated, mid dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage, or 15 to 20-year mortgage on it, especially a conforming loan. And then I would roll it into Bitcoin because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally, the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So, I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgages. Don't get debt free. Uh, any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
I've met so many people at this conference who have created tremendous wealth just from buying MSTR. How does that make you feel? You've changed lives. I mean, people have expanded their families. They've retired early. That must feel good.
Yeah, it's gratifying when you can help people, and so probably there's no greater compliment than someone says like, you helped me financially to be secure in the future hopes and aspirations for my family.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful, multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. Up next, Bitkey. Bitkey is a Bitcoin hardware wallet with multi-sig security, inheritance, and a recovery system designed for real life. No complex setup, no seed phrase, just true self-custody without the stress. It was named one of Time's best inventions in 2024. Use code STORIES for 20% off at bitkey.world. Next up, the Bitcoin way. Bitcoin is only freedom money if you control it fully. The Bitcoin way can help you learn the skills to properly secure your Bitcoin in 100% self-custody with zero counterparty risk. Go to thebitcoinway.com/Natalie to speak one-on-one with the best experts. Your security and sovereignty are priceless, so don't gamble with your future and peace of mind. Want to reach millions of Bitcoin users? Speed Wallet makes it easy. Launch your app on Speed's mini app store. Publish your app in hours, no coding needed. You can also accept Bitcoin payments effortlessly with Speed. Ready to grow? Publish on Speed today. Visit speed.app. Can you share more about the new products that you've released, STRF and STRK?
Yes. Yeah, the exciting thing about them is Strife is a preferred stock that we built on top of Bitcoin. It's about 5x over collateralized right now. So it's a very over collateralized preferred stock that pays a 10% dividend at par at 100. So if you buy it, you collect a 10% dividend forever. It's perpetual. There's no call option. So you could literally hold it for 30, 40, 50 years. And that's for people that maybe they want to put it in their retirement account, or they want high quality income. Strike is for people that would like upside, but they don't like the volatility of Bitcoin, and they would like some kind of principal protection. So Strike pays an 8% coupon, so you do get a dividend yield at 8% par, and it has a conversion rate that works out to be about 35 to 40% of the upside of the common equity. So it's like, you're trying to get 80 to 100% of the performance of Bitcoin with downside protection, with a living stipend, right? With a guaranteed dividend. So we created those two different securities for people that that have different risk return profiles. And when you pair them with the equity, what it means is if you want to outperform Bitcoin and you're all about performance and you want volatility, then you would buy MSTR, the common equity. If you want something that's got guardrails, a bit of a stipend built into it and a downside protection element, that you buy Strike. And if you just want pure fixed income and the most you can get, you would buy Strife.
Seems like there's a lot of innovative financial instruments in the pipeline blended with Bitcoin or backed by Bitcoin. I know that you've heard of obviously BitBonds. Is that something you think our country could embrace, releasing bonds that are backed by Bitcoin?
Yeah, I think it's a very novel idea and it would be great for the nation. And I think it'd be great for the bond buyers too. So, like a lot of novel instruments, it takes leadership, right? From the executives. It'll take leadership in the Treasury, and then it'll take an investor education campaign. But it is a great solution. I think the great thing about Bitcoin is it's been like the highest performing commodity asset in the world. So the greatest source of financial energy in the world. And that means that you can construct a great bond, a great fixed income preferred, a great convertible instrument, a great equity instrument, a great low risk, investment grade instrument. You can sweeten an insurance portfolio. You can improve the performance of a diversified stock portfolio. There are a lot of things you can do in order to improve the outcomes of any financial action. I almost look at it like it's like the sucralose of finance, like the universal sweetener, super high performance. And so there's a world of opportunity in the financial marketplaces if you incorporate the appropriate dose of Bitcoin volatility and Bitcoin performance into whatever instrument you're trying to create.
Are you surprised the US hasn't yet bought Bitcoin?
I'm not surprised. I was surprised that the U.S. has embraced Bitcoin as radically as it has over the last 6 months. I think I didn't expect nearly all the cabinet members to be so enthusiastic, or the Secretary of the Treasury. I didn't expect the strategic Bitcoin reserve, to be put in place so quickly. I didn't expect the crypto czar to declare that Bitcoin is, the one, global digital commodity in the world and is digital gold. I didn't expect the President of the United States to say never sell your Bitcoin. So those I didn't expect. I generally expect that large governments will move in a plodding, somewhat methodic, not always rational fashion, because there are just so many interests involved. And so my expectations are moderated in that regard. I think most of the aggressive action will come from small, mid-sized businesses because they have the most to gain, the least to lose, and they can move the quickest.
But when the rhetoric has changed from the White House and we have the strategic Bitcoin reserve and all these tailwinds, you're buying pretty much every Monday. Why isn't the price at 150 or 200K?
I think we're going through a rotation right now where, lots of non-economically interested parties are rotating out of the asset, and then a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees, like the FTX bankruptcy, and they kind of had to hold it for a year or 2 years as they're working through their process. And then when they saw this massive market rally, I think a lot of those trustees, they don't have a 10-year investor's mindset. They just thought, well, this is a good exit point to get liquidity. So I think people less committed to the long term have been taking this opportunity to exit the market. And I think a whole new class of investors are entering by way of the ETFs and by way of the Bitcoin treasury companies.
One of the things I enjoy most about talking to you or listening to you is the whole market could be in total panic, fear, anxiety about maybe the macro factors, and you always have this sense of calm about you that things will get resolved. So you're clearly not worried about things that are happening will eventually resolve these global tensions, the tariffs, and it'll be smooth sailing for Bitcoin eventually. That's the read I get.
Every single crisis recruits a new class of Bitcoin believers. There's just a delay in between the crisis and the Bitcoin rally. So, for example, in March, Bitcoin crashed with everything else down to like 4,000 or 4,500. And I started buying it in the 9,000s or the 10,000s. And I remember when Bitcoin was 10,000 and the NASDAQ was like 12,000. And, then Bitcoin would rally up and rage, and then there would be a crypto crash and it came down. And on the other hand, here we are today, Bitcoin's like 96 or 97,000, the NASDAQ 17,000. And now we're in a big tariff crisis. And the near-term reaction is always the market cramps and everybody sells everything. But the long-term reaction is, if I had all my money invested in Bitcoin instead of invested in that company, I wouldn't have been affected by tariffs. And so what you have is a reallocation of portfolios to being more Bitcoin, less the other thing. People are thinking now, if I had more Bitcoin, less gold, I would have made a lot more money in the last 4 years. If I had more Bitcoin, less big tech, I would have made a lot more money. If I had more Bitcoin and less that bond instrument, I would have done better. So these are teaching moments, right? And in any macro panic, the most liquid, leverageable asset is Bitcoin. Bitcoin is the only thing that you can sell. You can sell it short with 50x leverage on Saturday morning. It's the only thing that you can short 50x on Saturday morning. So when people panic on a weekend or an evening, it's going to be volatile. And if someone wants to sell some financial asset because of some gloom and doom thing that's happened, they're going to go to Bitcoin first because it's the only thing they can trade. And not just trade in the US, trade globally, worldwide. And so it is volatile because it is useful, and it will be in times of panic and contraction. It will correlate for a short moment with other assets, but then it will bounce back and it will it'll break that correlation, decouple, and it'll rally higher. And that has happened, consistently for the past 15 years. And it's happening right now as we watch it. So I'm calm in these times because I think we're going to win over a new set of Bitcoin believers, and a new set of people that thought they had the perfect business are going to realize that no investment in real estate and private equity and public equity or in a currency derivative is a risk-free investment. And when we say, look, Bitcoin is not a currency derivative, it is not a company, it is not real estate, it doesn't have a supply chain, it has no employees, it has no nexus, it is not, subject to that counterparty risk. Now there'll be a new class of investors that will understand what it means to be exposed to those risks, and they'll be like, oh, you mean like no tariffs on Bitcoin? Mm-hmm. Yeah, no tariffs on Bitcoin.
It's so wise. And I think people realizing that it is decoupling from everything. It is such a unique asset that shines on its own. Well, thank you so much, Michael. The best place to wrap up, I think, is just again spotlighting how well Microstrategy, now Strategy, has performed on the Bitcoin standard. When you put up those charts of just how it's outperformed the Magnificent Seven, gold, bonds, everything by far, it's crazy to me when I see mainstream media still not understanding how powerful this could be for a corporation and not jumping on board and realizing how revolutionary and how visionary you are. When do you think mainstream media will come behind companies like yours that are doing something so innovative that's clearly working?
It's an exponential process. When I was at MIT, I studied complex exponential systems. And they started with an illustration where they say, well, you have a pond and there are lily pads in the pond, and it takes 30 days for the lily pads to spread across the pond, but they're doubling every day. Mm-hmm. On what day of the month will you notice you have any lily pads? It's like it's a quick test of exponential math, but you realize the first 3 weeks of the month, you don't see any lily pads in the pot, right? And then you like notice a little bit. And then like in 3 days of the month, everything happens. And so I think what's happening here is there's a exponential phenomena. You know who understands the value of our business? Our investors. Our investors understand, right? And you met some of them at this conference. And so the reason we announced we're going to double our capital raising program, and the reason the stock trades up when we announce we're going to issue $21 billion of equity, is because the investors understand. They're on the journey with us, and we keep recruiting new investors. And I think there was some stat that I heard from an investment bank. They said, last year, your company was like 16% of all the equity raised in the stock market or something. So, we're not half, but the point is one company out of 5,000 companies that is raising, 16% of the capital on the market suggests that there are a lot of equity investors that are discovering what we're doing. And, what I've said about Bitcoin, right? The secret of Bitcoin and the simple, elegant truth, and the reason that it's spreading virally everywhere on earth, and the reason it'll keep spreading. So a lot of smart people in the world, they just want to keep their money. That's the secret, right? People buy Bitcoin because they want to keep their money. People are starting to buy Bitcoin treasury companies like Strategy because we've constructed a very elegant, powerful business model based upon digital capital that strips away all of the dozen risks that are plaguing every other well-run company in the world right now. And so investors are smart. They think, well, how do I get a return and avoid the risk, and what's working? And, more and more are discovering our company every day.
You've pioneered the corporate playbook and you're giving it away. I know so many people are grateful. Any final thoughts?
Just happy to be on the journey with you.
Well, thank you so much as always, Michael. It's just a pleasure to be here. And I know so many people look up to you. It's always wonderful to see you with a new presentation that gives us something to think about. So thank you.
My pleasure.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. Sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.